Hello everyone, Akash here. This video I'm gonna talk about if you're going to a dealer and you're gonna buy a car and you're gonna finance it, basically used car. Let's say a $15,000 car, you're gonna finance it. So what are the things you should calculate before you even go to the dealership to buy a car? And especially if you have a fair credit. Fair credit is mean not a good credit. It's just a fair credit is like 600 to 661. It's called fair credit. So you have to consider what are your option is and how can you get a best deal. Over the last 15 years, I bought many cars. I won few cars myself, and these are the main thing, because 1 month, 2 month, 3 months later, you say, oh my God, that deal I did, I really needed the car, but this is not a good deal. You're gonna lose a lot of money. So this video is for you. By the way, I do have another channel. You could check it out in my link in description box. It's a hair treatment, hair loss solution. There's a lot of good people getting help every day. That channel has been there for a few years, and this channel also consider subscribing, because I do have many videos in this channel, money saving tips, which could really help you, and I do upload every week, at least one video every week, so you could check it out. So let's say you see a $15,000 car on an app that you're thinking, oh man, that car looks a good deal, $15,000, but you have a fair credit. What is fair credit means? Fair credit means you could borrow money, because you don't have $15,000 to buy a car right now, but you could borrow money, and you wanted to borrow money, but you wanted to borrow money in lower interest. How could you do that when you're fair credit? It's very hard to do, because fair credit is mean like, most of the time I see like, you could get like a 10%, 8 to 12% interest they charge you, fair credits. If you have a credit close to 700, you could get much better deal. If you have close to 700, if you have a local credit union around you, you should just call them up or something. They will give you like 2%, 2.5%, 3%, which is much better than paying 8 and 12%, because that $15,000 paying 8 to 12% interest every year, you know how much money is that every year you're gonna pay for that car if you're gonna finance that car for 5 years. And always remember one thing: if you're buying a used car, even it's $15,000, even you see a two car, one what you really like, another one you just like, yeah, it's okay, but it's not that good. But other one you really like, but the one you really like has a high mileage than the one you like, it's okay, I could live with that. It has low mileage. You always go for the low mileage, because first of all, you're financing a car, right? You have a monthly payment now, and now if you have to get a high mileage car most likely is going to break down, and when it breaks down, it's going to cost you every month. Every time it breaks down, you got to pay for it, plus you have to pay for your finance charge every month, plus you have to pay for gas, and also you have to pay for the insurance, because every time you finance a car, most likely you need to get a full coverage, which is going to cost you always more money. So you have to consider, I have to get full coverage, I have to pay monthly, plus my fair credit, because I have fair credit, my interest more likely gonna be higher, and also if I get a higher mileage car, most likely that car gonna break down, so I'm gonna end up paying more money over the year. Those are big factors, that a lot of people, even myself, when I was early 20s, I didn't even think about those things. I see a shiny car, I didn't think about none of those things and just go buy it. So these are the things very important. So what should you do? Let's say you're driving a car right now, you need a car. Okay, I totally get it. You want a car, I totally get it. But your credit is fair. Fair credit mean maybe you have a higher balance on your credit card. That could be like most of the time, that is the reason you have a fair credit. You pay your bills, but you don't pay enough. Your balance is always higher. Your credit card bill always higher. Why don't you just take like 2 months, pay a little bit more to bring the balance down a little bit more. Let's say you bring down the balance a little bit more. You see that your credit is right now 661. If you could bring down a little bit more in 2 months, even 3 months, you bring it down a little bit, you will see your credit score gonna go up to close to 700. That's the only reason people get fair credit, because they may always make payment, but they always max out their cards. That is the most of the time is the reason. So if you just wait 2 months or 3 months, you could just bring it down. Or maybe the time you're thinking about buying a car, same month, just pay a little bit more, bring it down. So what's gonna happen? Your credit score gonna go up, and then you'll get really low interest monthly, you're gonna pay your monthly payment for your car, and you're gonna get really low interest. Sometime when you go to the dealer, Never say how much you want to pay for it. If the $15,000 car, they are like asking, what are you looking for? Like, how much you want to pay? You want to pay $200 a month or $250? They wanted to hear from you. So if they cannot make the deal, they're going to extend the finance. Like if they have a 5 years finance, if they cannot do it like $200, $250 looking at, they're going to do 6-year plan to make it into that $200, $250 that you're looking for. You never say that. You just walk in there with a good credit, close to 700. If you have a fair credit, just fix a little bit, go there, and then you buy the car. So then, you know, they know that you have a good credit, and they're gonna say, oh, you have a good credit. Let's see this credit union or this bank giving you really low interest. You already know that you have a good credit, you're gonna get a low interest no matter what. They're not helping you. They're just telling you that, making it look like that, oh, they're giving you a good deal. That's not it. $15,000 car, you're just gonna pay for the tax on the title. You don't want to pay for any dealer fees. You tell them, listen, I don't want to pay for any dealer fees or anything. $15,000 car, that's it. And you have a good credit now. So now you have the leverage to bring down your monthly payment low, and always go for the lower mileage car. Because if you get a lower mileage car, your monthly payment low, because your credit score is good, you got it, you're paying less money monthly, plus lower mileage car, less likely is gonna break down. Never buy a warranty from the used car. Never get it. Never get a warranty. Never get a gap insurance. Anything else they wanted to sell it to you, never get that. $15,000 car, you finance in the low interest, and you just walk out of there. You don't want it to, because most of the time, you know what happened? You $15,000 car, they sell you warranty, they sell you like gap insurance plus the taxes and fees. You walk out of there with $20,000 car. The $15,000 car is not $15,000 anymore. It's $20,000 now. All those things added in. And then what happened, if you still, right now you walk into a dealer with fair credit, plus you got to pay high interest for that car every month. So think about that $15,000, how much it's going to cost you in 5 years. Just think about it. So first thing first, fix your credit a little bit. Try to get to good credit, close to 700. You will get that. If they cannot provide you with a lower interest, you find out, Google it, go for credit union. And the credit union, if you get it, if they give you a credit union card, if you could use that card to lower your insurance. So because you, very important, you want your insurance to be lower. The credit union member, if you become their member, they give you low interest loan, plus they give you the help you with your car insurance. So not only you saving money on interest, you're also saving in car insurance. Personally, I'm not promoting anybody. I personally use credit union myself, and I have 3 cars, and it really helps me paying my lower my interest. Living in metro area in New York definitely saves me. Hope this video is helpful. I know you wanted that car so badly and everything, but just fix that credit, first a little bit, and then go. It's gonna be much better. By the way, if this video is helpful to you, please hit the subscribe button. And also, I do have another channel. You could check it out in the homepage, and that could help you too. Thank you.